So let's start by saying, what is conscious investing?
I'm not going to answer that question. I'm going to answer a different question. I'm going to define the terms because I think that's helpful. So zebras versus unicorns, and I'm going to be brief. So this will probably take me about half an hour. So one of my business partners, a woman named Astrid Schultz, co-founded or started, I should say, initiated a movement called the Zebra Movement. She and 4 other female founders out of the United States recognized that there were some real challenges in the way that businesses were being defined. And so they were essentially starting technology companies, the goal of which was to have a beneficial impact upon society, and that the dominant model for success was to become a unicorn. And so they created a new paradigm, essentially, called a zebra company. So this is a term that's in use. It has a very specific meaning. And essentially what it's saying is that a zebra company is a company that is not focused on being extractive. It's not focused on creating 10 or 20 or 30x outcomes for VCs. Typically, zebra companies aren't actually looking for venture capital because they don't agree with the model. The founders typically remain owners, and really they are more interested in creating long-term systemic growth in ways that are equitable and ethical than they are in driving for the untrammeled growth, which is the very popular model that you see coming out of Silicon Valley. So this is painting with a very broad brush. Granted, like I'm not saying that unicorns are fundamentally bad, but if you want to know more about that, go to zebrasunite.com and you will see actually a graph that shows the broad characteristics of zebras versus unicorns. And really the fundamental basis of it is they're saying unicorns are mythical creatures, they're not real. Zebras are real things. A group of zebras is called a dazzle. Zebras are naturally collaborative and supportive. They're neither black nor white. They're both. And so it's a paradigm that I think is worth understanding if we're going to actually talk about what it means to invest consciously.
So one of the main problems is that basically the way the VC model is structured as we speak today is that it basically focuses on investing in companies that brings 10x or 5x or 3x returns for its stakeholders. And that basically makes up for the whole culture of fast, 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 and for the founders to not really look at building a culture versus actually building and gluing copy-paste employees so that they can actually grow very fast. We found in recent years a lot of the unicorn companies themselves collapse after they hire 1,000 employees. And I'd like, especially since we have an angel network and a VC in our panel, to get your thoughts on especially companies and this way of unicorn or breeding unicorns is a culture that has been bred by Silicon Valley particularly, and in other parts of the world like Egypt and in emerging markets where it takes a lot more time for the founders to even understand the problem, work on grassroots solutions and all that, and also it's where we need to be advising for patient capital. So what's your reaction to something like that, and what are your best practices in this area?
So there are 2 responses to this. The first, and this is not a reflection of whether I agree or disagree and what's better and what's not. I really don't know what's better and what's not. I'm just going to tell you what I think is at play. Venture capital is, without a shadow of a doubt, the purest form of capitalism, right? It's very fast, it's very quick, and it's also a reflection of who we've become as people, right? We as people have become more into instant gratification. We want faster, 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 the same culture, everything. And you see that whether it's in how we eat, how we date, how we drink, how we do everything, right? So we as a people have changed. So if you take how we have culturally changed, and you apply that to my LPs, who are the people who give me the money that I in turn give to startups, they want returns bigger and faster, right? And if I don't oblige as a venture capitalist, then I don't have LPs and I don't have a job, right? So I have to react to what my investors want, and I have to be able to give them what they want, right? So that's how this culture has become a bit more prolific and why we're looking more for unicorns. It's because it's a model that everyone understands. It's the most popular model. It's what everyone sees as the measure of success, right? If you take that and you apply it to Egypt, for example, I can only speak about Egypt, you have a very unique situation. It's not that Egyptian investors see this whole unicorn thing and they want it fast, fast, fast. It's actually we as Egyptians are used to a type of investment that gives us either guaranteed returns, which is what you get when you put your money in the national bank and you get 20% fixed return for however many years, which is a huge competitor for a fund manager to try and raise money against, and real estate. If I put my money in an apartment, in 3 months' time I make 20%, in 6 months' time I make 30%. The returns, it's become embedded in how real estate developers price their products. So investors or potential LPs don't have the mindsets of patient capital. They don't understand that it's going to take some time to build sustainable businesses, and it's so weird because Egyptians were all about building businesses. The grandparents built a company and you gave it to your kids and your kids gave it to their kids, and it was just part of your legacy and part of who you are as a person. So there's a huge disconnect in Egypt, and to change that is a major overhaul in how people think and how people invest and how people approach returns and think about their returns. Does that make sense?
Makes sense. So Fatima, you've looked into not just the Egyptian market as a Cairo Angel member, but also you've worked for some time for Endeavor in South Africa. You, by nature of being based in New York, you've seen very developed markets, and also you've seen kind of like intermediate markets, and then also you've seen the emerging markets. So can you, in light of that, tell us a little bit more about your experience of the practices?
Sure. So the venture or the angel network that I'm part of called Cross Border Angels. So our premise actually believes in the zebra model because, like the first presenter yesterday, how he was saying a lot of the next generation, whether it's technologies or philosophies or wisdom, is going to be coming either from hybrid Western, Eastern models or coming from Eastern philosophies and thinking from different parts of the world. So our premise is like for the companies we look for, my business partner, she's from the Philippines, and we started first in the Philippines because that's where her expertise was. But we don't focus at all on like rocket internet type models where the companies have to have some copy in the US and we're trying to just mimic it here, such as Ubers and so forth. We could be extremely local, and because we both understand the cultures very well, we can see that the problems and the entrepreneurs that we look for could be very, very local. They don't have to be the same as anywhere in the world. They could be like a few women in a house that are doing something very interesting online. So we generally believe in the zebra model, and we actually think that this is going to be the next global wave in general. So.
Amazing. So as we see, some angel groups are connecting a lot more with the Zebra's model, but the VC model is historically structured for bigger returns, exponential returns somehow. And in light of that, I wanted to kind of, because at the end of the day, the angel gives, he gives the torch to another VC to continue. So it's still part of the same traditional investing model, which is basically the venture capital model. At the end of the day, when you breed companies, you are either looking for an exit or an IPO at the end of the day, and you're trying to go as fast as you can towards one of these two options with the capital you raised. So my next question is for Evan, since he's a blockchain expert. Are the traditional VC models going away and being disrupted using ICOs?
Well, let me start with this little fun fact. So in Q1 of 2018, there's been as much investment in ICOs as in the 2 years combined before that. We're just talking about Q1 2018. So there's an upside and there's a big downside to this. Because what you're seeing is a lot of attention to ICOing and getting a lot of money in. But the problem is, I mean, blockchain is the land of unicorns, right? But there's a big problem with unicorns is that they're highly disruptive. But I'm personally a believer of the Zebra model as well, because I believe that it's basically incremental growth versus disruptive growth. But without having an attention on the ethics of implementation, without having a sustainable business model that will be able to be sustained over the coming years, we will not be able to maintain this level of security in our systems, maintain this level of returns, because if your model will work for 5 years and it comes crashing down, then it's not really a sustainable model. So in terms of ICOing, what you're seeing a lot is people are getting in right now for the sake of the hype, because there's a huge hype going on. And it will only last for a certain amount of time, meaning people are just doing it for the sake of doing it to get as quickly in the market as they possibly can. What this also creates is that there's a huge welfare distribution going on, right? So people buying Bitcoins in 2010, waking up in 2014, like, wait, I have 20 Bitcoins, I have 40, 50 Bitcoins. People going into garbage dumps trying to find their computer because there was 10,000 Bitcoins on it. So, but what this really creates is that there's a really big environment for new investment in a new way by other people who are actually outside of the VC model. And I think that's really interesting when you're looking at how it's going to change the way of investment, is because of the fact that there's now just now we're moving into blockchain for good, blockchain for humanity, where what's the real version of a billionaire? A billionaire is a person that can influence 1 billion lives, rather than creating a $1 billion company. And I think we're just getting into that right now, because blockchain before that was highly commercialized and really about just creating an application or creating an infrastructure which would generate ridiculous returns. And with that, there's a big danger of investment because people don't know where to invest because it's too much investment. Does that clarify?
Yeah, that makes it a perfect transition into the next question, which is basically the VCs have traditionally invested in startups, but there's a secret sauce. There's something about the VC model that makes it work, because at the end of the day, this fast, it works. I mean, sometimes some companies get to thousands of employees, but then end up failing. But it also breeds people like Uber. It also breeds people like Airbnb and all of these other companies that are highly functional companies. So the intelligence of the crowd, since ICO is something that is completely new and nascent, is not really catching up with how VCs used to basically think about investments. And also the Zebras, if they're not actually taking money from the investor, from VCs because they don't believe in the VC model, there's a fundamental problem in taking money from foundations and from nonprofits, which is basically that they don't also understand how technologies work and how they can actually help grow them. So this question is for both Cameron and for Tamer. From your perspectives, what do you think needs to be done in order for the VC model to a little bit adapt to what is happening in reaction to the globalization of entrepreneurship? And also, what should the foundations and the nonprofits also do to be able to actually get closer to understanding how technology works?
All right, this is it's a bit tense, but I think I'm going to be as forthcoming as I can, right? So the thing is, ultimately, you have the investment landscape is very binary, right? You either get money from a VC, you get money from a foundation, and by VC I mean sort of angels and all that stuff, right? So you get money from VC, you get money from foundations, then someone came up in the middle and they're like, okay, well, we're impact investors, right? And impact investors are still kind of feeling their way around, so there's a lot of money going into impact investing. There's some great initiatives around the world, like Big Society Capital in the UK, like the Amidyar Network in the US, and they're a little bit skittish of the type of investments that VCs make. They are definitely skittish around the type of investments or type of funding that comes from foundations, but they are far more likely to be aligned and investing in Zeras than anyone else in the market, right? So the question should be more headed towards impact investors and how they can maybe change their perception of a social enterprise or an impact investment, right? Because it's if they can see a social enterprise as a zebra, or social enterprises can be more zebra-like, then we actually stand a chance. But for me as a VC to come and say, okay, I'm going to turn the entire venture capital model upside down, I'm going to ask for 20-year funds as opposed to 10-year funds, I'm going to invest more money, wait longer, not raise as many rounds. I am fundamentally changing a very, very powerful beast, right? You have a far better chance having this little nudge with impact investors than with VCs. And foundations are just not gonna make it. Like, it's just not, I personally just don't think they will come to that model, and the way they give money and the way zebras see that as a sort of charitable gift giving is just, it's so far away. And VCs are just as far. So you need someone who's a bit more of a hybrid like.
But the global trends aren't, so basically in 2016, the global market for VCs was around $120 billion, and it's been incrementally increasing for 20%. But actually the entrepreneurs that are coming into the market, especially in markets, in emerging markets, it's exponential. So year over year, there's a statistics that says that there's 3x more entrepreneurs every single year than the year before. And having incremental growth in VC does not cater for that huge number or huge amount of companies. And again, I understand it's a race for funding, and that 90% of the companies fail to even fundraise initially. So you're not seeing on the global trend that basically the VC funds that are popping up everywhere are actually shrinking in size, or more people being more allocated to ICOs and other things and impact investment?
I mean, that's a totally different question, right? So in our region, for example, one of the biggest problems in VCs is the lack of fund managers. There's not a lot of people with experience in managing funds. So if, let's say, the IFC or the EBRD wants to go out and find someone to run a fund, actually their options are pretty limited, right? And if I decide, okay, I want to go raise a fund, for me to find one or two other people to raise a fund with me, I can assure you I can probably only find one other person, right? So the problem isn't so much that there aren't people out there willing to give first-time fund managers money. There's just not that many first-time fund managers, and there's not that many big VCs that can afford to splinter, right? So the growth, there's a much bigger barrier to growth in the number of VCs operating in this market than there is a barrier to the increase in the number of entrepreneurs, right? So we have a bigger, more challenging time actually becoming VCs and becoming fund managers, because not a lot of us have that kind of experience, and not a lot of LPs, generally institutional LPs, are actually willing to take risks on experienced fund managers. So you end up with very large funds, very few very large funds, with an inability to deploy because they don't have enough partners or don't have enough principals, enough associates. There's just a talent pool in the fund manager space is actually super small.
Going back to the foundations question, what do you think the foundations should do in order to be able to cater better for conscious techies or zebras in technology?
and again, I'm going to answer your question, but I'm going to answer a different one first. So look, there's 7.4 billion people on the planet. 1.3 billion people don't have a formal identity. 2 billion people live below the poverty line. 1,800 children a day die from lack of access to clean water, right? I can go on with the statistics. We have a fairly significant problem. VC doesn't work for anybody other than the VCs and the company that winds up being successful. VC is grounded in an extractive economic model, the way in which capitalism is currently being practiced, which recognises or fails to recognise the externalities, which are negative externalities, right? So modern capitalism is rooted in saying there are things that don't exist within this model. They are negative, like the cost of the environment or pollution, whatever. We don't need to cost that in, that sits over there. So the challenge with the VC model is that it basically involves taking large risks with the presumption that most of those risks are going to fail. And because most of those risks are going to fail, you have to have a significant return on the one that will actually succeed. And the problem with that, the way that that works along the line, is that it's not that Uber is necessarily a great company or that Airbnb is a great company or Facebook or Twitter or any of these other significant companies are necessarily great companies. It becomes a self-fulfilling prophecy. Right? They're the ones that show promise, and so they continue to get funded. Others that have been funded get abandoned along the way, and those companies wither and die, which means that innovation withers and dies. It means that people lose their jobs. It means that early investors who weren't VCs in those companies lose their investments. So the negative impacts of the VC model are significant. From my perspective, VC is dead. It just doesn't know it yet. I think that, when we talk about there's $120 billion in venture capital, right? And it's growing, as you said, incrementally. Impact investing is tiny compared to that. But it's growing at 16% year on year. In my keynote yesterday, I said we have a $50 to $100 trillion problem in terms of solving the most pressing problems facing humanity. And if we don't solve those, nothing else matters. If we don't solve climate change, nothing else matters, right? Like, these are the big challenges that we're facing. And so I think that the opportunity is not for VCs to just keep doing their thing, or impact investors to just keep doing their thing, or funds and foundations and philanthropists and ICOs and whatever else to keep doing their thing. To me, like, the question of investing, it's simply about a transfer of capital, of any form of capital, human, social, intellectual, financial. We invest our capital towards a specific outcome. And so if we want to go and solve these problems that really matter, which are not only significant problems, but very, very lucrative problems to solve, a $1.7 trillion problem, a $50 trillion problem is a $50 trillion market opportunity, then what we need are mechanisms and incentives for investors of all types to combine their capital more effectively so they can generate the type of financial return that they want and the type of social and environmental return that they want. That's ultimately, as far as I'm concerned, what the solution is. Because the current state of play is never, ever, ever going to get us there. Mm-hmm. Who's got $50 trillion lying around? Anyone? No one. No one has the money. So private equity investments, grants, donations, none of this stuff works. It doesn't work. We have a $50 to $100 trillion problem. We don't even have one company in the world with a $1 trillion market cap yet. And somehow we think that we're going to be able to solve these problems the way that we're going about it. So the solution is collaboration.
Mm-hmm. Mm-hmm. So I wanted Fatima to comment on that, since you and Evan are kind of sitting in between the zebras and unicorns fight. So what's your reaction to this?
So I don't agree that VC is dead, or there's no positive outcomes from unicorns such as the Ubers of the world and so forth. But I do think the big issue with VCs and some of the more traditional investing is that they don't take into account the main thing in our lives, which is time. For example, when you look at statistics for VCs, they put so much money into so many companies and then one becomes big. But all those other companies in the meantime that might not make it because they were following the traditional VC model of just trying to make the numbers work or user acquisition quickly or just short-term advertising models or whatever it is. They haven't really helped society that much. So once they do run out of funding or might not make it or anything, they sort of have nothing to show for it. Where if you have some of these new innovative models, such as the eyeglass companies that are making a lot of money, but they're letting the world see as well, and some of these innovative models that are very win-win, they help the investors, they're helping society, they're taking into account time, because even if they run out of money or if they fail or anything, look how many people they've already helped. So it's already a big plus, and it'll also keep them going motivationally, because a lot of these even successful entrepreneurs who are making a lot of money, who are just about the money, they end up becoming depressed or they don't know what to do. Like I have friends, they're great people and everything, but once they exited, they just don't know what to do. Like they have a lot of money and they'll go on a few vacations and then they're just like stuck. Because they haven't been giving back in the meantime. So I think that these new innovative models, it's also up to the entrepreneurs to think of really great new business models that the investors are winning, they're winning, society is winning, and really capitalizing on the most important thing for everyone, which is time.
What's your reaction to the 7?
It's a lot of interesting things I hear, but there's a couple of key words here, and it's innovation. And I tend to define innovation as adding value in a new version. So you have a lot of different types of applications, but it's taking that application, putting it somewhere else, and generating value. The thing about value is just for whom? And I think that's the key question here, is that for who are we creating and generating this value? So just to give an example in the blockchain case, what you're seeing, there's a lot of blockchain solutions being built who are then, once the solution is finished, are looking for a problem. And I think this is the wrong way to build, well, any form of innovation, is that you need to start at the problem. Who you're trying to help, who you're generating value for, and once you have an understanding of who you're trying to help, you create the operational context of who you're trying to create a system or an infrastructure or an application. But the problem is that if you're looking for funding, you need to have quick returns. You need to have the billion-dollar company within 3 or 4 years. But in order to implement responsibly, implement in a problem, specifically in my use case, which is the humanitarian use case, you cannot implement as easily because you cannot really try out on vulnerable populations, because once they're the ones who's going to feel the repercussions. Meaning, if you want to implement in a social impact or context, you need to take slow steps. Baby steps, one by one. And this is not as interesting for VCs because they say, okay, but blockchain, but I can get a return of 100% in 3 months. Why can you not offer me the same thing? Well, the difference is what we're trying to offer is we are offering a solution which is sustainable for years to come, and not just that, we are giving back. And we know who we're giving back to. So I think it's a really important decision we have to make, is that are we looking for user-centric innovation or enterprise-centric innovation? So what you're seeing in blockchain is that everybody's trying to go to the enterprises because that's where the big money is. The problem with that is that you're not helping the people they are trying to help. So my main thing is that I always take into account when I'm talking to a lot of ICOs and I'm talking to a lot of companies, that always ask the same question: who are you trying to help? And a lot of these people don't actually have an answer to this question, which scares me. So I would like to invite everybody to start asking these questions, especially to the VCs, is that ask to the people that are coming to you for money, who are they trying to help, and how are they ensuring that this actually is going to happen? Because people have a lot of, well, promises, and they say, yes, I'm going to help these people, but then they under-deliver, and I think that's very scary, depending on where you are.
Do you have specific, each one of you, do you have specific companies that you have seen either grown very fast and did good positive change that you would like to share with us? Also, do you have other examples of companies that did not do that, did not do well, that you'd like to share from the market here or from other markets?
So you're thinking, so zebras that have done well. I mean, there's a lot of really good examples in the UK, because that's probably where this marketer approach or way of thinking is most successful or most prolific. In Egypt, we've seen some of these types of companies start doing well. So there's a company called Kilim that have been working with people in rural Egypt. They brought new designers to redesign the traditional Egyptian kilim, and then they started working with people who manufacture it to start producing far more interesting and exciting kilim than the one with the camels that we all know and somewhat love. There's another company called Jurid. These are all still very small companies, you know, but we're seeing these guys think more holistically, think more long-term, think more about who they're trying to help. And it's not just about selling the product, but it's also about helping the people that create these products do better and reach wider markets. So we are seeing some good examples here in the local market. I'm trying to remember some of the successful ones in the UK. I think there's a really cool carpet manufacturer also. I can't for the life of me remember, sorry? Interfloor? Yes, and they work with nets, fishing nets that get extracted from the sea, that have a lot of problems that get left by fishermen, and they use them to make interlocking carpets for offices, and it's amazing, and they've been doing super, super well. So there are some companies that are doing some amazing things, that are profitable, that are growing, that are contributing to the betterment of society and our own well-being.
So I want to illustrate both sides, actually. So start with the bad, because then at least you leave with the good. We were talking together with Noor, I've been talking about this for a while, is that, for example, one of them is Monero. And Monero is the transaction of money in the same way Bitcoin does. The only thing is that it's completely anonymous, completely untraceable. Well, when you start that, it's a privacy coin. So when you start doing that, you think, okay, that might be actually really good because you can hide transactions, because not everybody's supposed to know everything, right? Mm-hmm. However, currently it's being used as the #1 coin on the black market, obviously, because this is the part where you are implementing a solution without looking at the negative externalities. Mm-hmm. So once you start implementing a coin that can do this, and you don't stop to think about, okay, but what is then the potential misuse of my coin or my app or whatever it is, then you get these type of problems, because they were able to, for example, close down Alphabay, which was basically the eBay of the dark web, where you can buy passports, guns, whatever, you name it. And they were able to lock us down because they couldn't find the transactions through the Bitcoin network. They attacked 16 servers worldwide at the same time, brought it down. Funny thing is, if you look at that moment in time and you go to the CoinMarketCap, which is the place where you can check the stock price, after they crashed these 16 servers on Alphabay, the entire market came crashing down. So what I'm hoping, and I'm trying to create as well, and I'm trying to push, is to flush out the bad money, flush out the misuse. But the problem, if you don't take into consideration what the potential misuse of your system is, you will not be able to create the sustainable model for your business. So to go into the segue into the good, there are a lot of good developments in blockchain as well. And I really want to acknowledge that, because they are in many cases undervalued because they don't create as much monetary value as the others. So, for example, one of them is the building blocks efforts. And the thing is about this is that not every blockchain monetizes their endeavor, which is something that's really important. Because everybody thinks that every blockchain needs an ICO. That's not true, because not every blockchain needs a coin. And they might have a coin, but it doesn't mean they're going to put it on a decentralized exchange. For example, one is building blocks, where they use blockchain technology with using iris scans to provide refugees in camps in Jordan with food. The problem is, how do you identify people? Actually, the problem in blockchain about identity is not about identity at all. It's about identification. How do you find people? How do you ensure that these people are the ones that they say they are, because you're providing them aid? So iris scans is one way of doing this, and they've been able to really help a lot of people in the Jordan camps by providing them food, because aid is limited. So you cannot provide everybody with aid, and then some person comes, gets aid 4 times, meaning there's other 3 people who won't get food. So how do you ensure that everybody gets equal share? And blockchain can be used to create a digital wallet with your personal information, gets attested by, let's say, UNICEF, World Food Program, UNHCR, and then you can make sure that the distribution of aid is done correctly, responsibly, and also protecting hereby the information of the people, like the beneficiaries, because they hold the autonomy over their information. And this is something that I believe to be truly very important, is that nobody here actually owns their own identity. Our identities are being leased by governments. If you want a birth certificate, you pay. You want a passport, you pay. Because you don't actually own it. And I believe it's really important to bring it back because you are the owner. So if you want to have data agency, it's not about privacy, it's data agency. You're going to need to look at different ways of implementing this, and blockchain can potentially help.
Fatima.
So for me, I usually gravitate towards companies and startups where I feel like I can personally use it, or people that I know would benefit from it and use it. So I like some of the new startups where individuals are selling their own things that they don't need anymore, things like Let Go and OfferUp. And I also like some of the very practical ones, such as the ones with the refugees cooking and providing people with homemade food that they couldn't get easily before and delivering it easy. So I like very practical ones usually.
It's really easy to pick on the bad, so I'm not going to bother with that. And for the benefit of both my investment colleagues and the audience, I want to say that I don't have a problem with unicorns, and nor do I actually have a problem with VC. I have a problem with extractive economic models. That's actually what I have a problem with. I think that there are some companies that will grow very big, very fast, and they can and do produce a lot of value. Typically, where we see the good is in consumer products companies. So things like Body Shop out of the UK grew pretty fast, is a very large company. Interfloor, who you mentioned, the only sustainable carpet manufacturer in the world. They lease carpets, they don't sell them. They come and they take them away. They recycle 97% of the carpet. So, it's like a really interesting model, and they're completely sustainable. So basically things that people consume and that get turned around, energy, right? People don't normally think about renewable energy or clean tech as being good, but obviously they are good, and they also generate a significant amount of revenue. I think that we're still in the relatively early stages. We're starting to see more aggregation, and I suspect that the movement is going to be away from looking at the heroes in individual businesses and actually starting to generate new investable asset classes that will bundle together deals from multiple companies.
Yeah, so to just wrap up, the VC's model is still growing, the impact investing model is still growing, and traditional foundations that are investing in startups are still growing, and the ICOs is a new alternative way for disrupting all that, but it has its problems. I think in the future we have to, again, it's the era of collaboration, and I think what's going to be coming out of all that is the next generation investing, or what hopefully we will see as conscious investing. In one sentence, what's your best advice to all of these entrepreneurs here that are building conscious technologies? Which route should they take? What's the best advice if they're fundraising today? Just one sentence.
So there's 4 of us. I'm not starting. I don't have an answer right now.
With me? Okay. Oh, wow. Okay.
One sentence.
No,
you
yeah,
have
okay,
to be
one
quick.
sentence. So
Yeah.
I've actually already said this. Start at the problem. And that's basically it for me, because if you don't start at the problem, then you don't know who you're helping. So if you can actually show that you have a community around you who you're trying to help, then you will go to a VC and say, look, I have these people who I'll be able to help through this set of rules, these set of applications, so they will understand, because it needs to be, it needs to be tangible.
Yeah, there's no better piece of advice than to build something that helps people lead easier lives. If you, the way to make money, create impact, to do whatever it is that you want to do, you need to find something that is really complicated, and then you need to untangle it. You need to take the complexity out of it. So find and build something that helps people live easier lives.
I would say don't get stuck to your initial ideas, and just be flexible along the way, and let people tell you what they like more, and try to work with the people as you go, so that it's a two-way thing rather than one way.
get over yourself. I would say get over yourself. Success leaves clues. Your ideas aren't necessarily brilliant. They've possibly been done before. Do your research, see what else is going on in the market, be prepared to pivot, right? Like all of these things matter. But ultimately, like egocentricity, it's important to believe in what you're doing and to have a lot of fire about it. But if you're egocentric, you're actually doomed to failure in this new paradigm. So it's really important to get over yourself.
All right, thank you.